Welcome back to the channel, guys. I hope you're having an amazing day wherever you are around this beautiful planet of ours, and a special hello and thank you to all of the new subscribers that have come across from James's channel over on Invest Answers. Did a magnificent live stream with him just last night with my brother Michael. So if I'm looking a little tired, that's an extra reason. Today's video, we're looking at a potential breakout. I know that could be a little bit interesting considering the whole bearishness that I continue to talk about on the channel, but I have it very clearly broken down. We've gone through this multiple times now over the last week just to try and clear up any confusion. Short term, medium term, long term. We need to know what's going on in that short term, basically all that sort of news that comes out and what the charts are showing, and then how we can play the market if we are traders or investors. So it's something for everyone, looking at these specific patterns on the chat and how not to get sucked in to the dumb money trap, the FOMO pump. And this has happened multiple times on Bitcoin, Ethereum, and basically every other market in history. It happens all the time, and it is designed to sucker in those last people before it spits them out and then continues on with the next stage of the cycle. And I believe that next stage is bullish, but that will take a lot more time. Probably wondering, why does this happen? It happens because the manipulators, the whales, whatever you want to call them, it doesn't really matter. It's basically the smart money, the big players who are playing against themselves mostly because they have the most money, not just retail, but they're playing against themselves. They need to figure out who has what left. They want to see the poker chips on the table, the cards, and then they can decide how they're going to play. So they have to sucker people into the market on the way up, spit them out on the way down, and find out where that bottom comes in. And this happens on all time frames. Short, medium, long term, it happens time and time again. That's the reason why it has to happen in order for the next stage of the cycle to happen. If it doesn't happen, then you're never going to know, well, they won't know where the bottom is in and where the top is in and how to judge their risk and reward. That's all it is. It's really, really that simple, at least the way that I look at the markets. All right, so let's look at this in the short term, medium term, long term, and I'll show the examples on Ethereum as well. If you haven't, make sure you smash up that like button. It does push the content out to more people so they can see this information. And of course, subscribe if you haven't already. Let's smash our way to 275,000 subscribers in this bear market. Short term, nice quick video today. I promise you, it's going to be quick. I hope I don't have to eat my words at the end. This is the channel that we looked at just last night, actually, on James's YouTube channel. This thing here, the most hated rally. This to me looks like the suckers rally. Basically, people are buying the dips higher and higher on the way up, doing the moves up, the traps, and then the fake outs to the downside, the fake outs to the upside, and they just continue to grind away. And this is exactly what we looked at over at least this last week. With my opinion, Bitcoin ready to test higher prices in 2022, but it's going to be difficult. There's going to be trading traps, and that's because we're at lower prices trending in smaller ranges, but we will get a breakout soon. Now, this typically is a type of bearish flag, but it's just gone on for so long that I think the flag is basically broken, and we possibly won't get that big downside push. Remember, it's trading. We don't have any 100% crystal ball answers. We're just looking for patterns that repeat time and time again with the probability that they're going to go our way. So I would have expected this to have broken down by now. Could be wrong, but we did look at this on the channel, and that I thought we're not going to see the same sort of pattern breakdown like we saw 3 other times in the bear market. That was all of these things playing out. We specifically looked at this, the little breakout to the dump, and the break and the testing to the upside, and the dump, and the testing to the upside, and the dump, and that's what we were looking for again here. But I said, I don't think we're going to get that dump this time. I think we need to go through a bit of an accumulation and then the FOMO pump before we get the dump, which may or may not break the 17.5K low. That's been the consistent message this entire time since we put in this low here at 17.5. We don't know if it'll get broken. A lot of people saying I'm waiting till 13 or 12K to buy. Honestly, no one knows really. So the FOMO to the upside, moving to the bigger time frame here, just going to the daily here, we've been hitting the $25,000 resistance level. Now, if I check this 50% just to the previous top, that's 24,600, and the other top here is at 25,000, 24,900. Basically, 24.5 to 25. Resistance, 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 resistance. The Wyckoff target here is the top of this bar, which is 26,850. We aren't there yet, but the market is still trending up and giving us some higher lows. So again, back to this message, Bitcoin ready to test higher prices. I think it's going to be difficult. It has proven to be reasonably difficult with a lot of rejections on the 4 hours and the 1 hours to the downside, and then also the moves to the upside. The little fake outs here with significant candles and bars to break to the upside, the typical patterns of your shooting stars and then the rejection and then the move back up. So that's where I'm looking at this being a little difficult. So even if we get this move down, I want to see it hold above 21.7. So we're just in that sort of medium-term time frame, going from the short term to the medium term in a moment. So 25 needs to break. That's my Wyckoff target. The upper bands here at around 32 to 33,000, which is the top of this zone before we broke down in June. So that's the medium-term targets that the market is showing us. This is the level that the market needs to overcome, and it has shown us now. The tops are around 24, the 50% level, 24.5 to 25. So it is really trying to overcome this level on the short term to medium term. Moving to the medium term, bearish pump trap. Bitcoin will trade below current prices in 2022 or 2023. Current prices around the 23 to 24K level. The pump is the suckers trap here that I've got, the dumb money trap, the FOMO trap, where it will just punch up and collect all of the orders on the way up. And then there's suckers in potentially the investors who did not buy at 17 or 18 or 19 or 20 or 21, any of those numbers below, and that are waiting on 13K, 12K, 11, 10K, sub 10K, and that starts to sucker people in. Now, it's happened multiple times in history. We've seen it play out time and time again. A couple of the recent examples, which we can look at, were the previous bear market. And so how much this pumped from those levels, you can see the breakout was at about 4,000 to 4,200. And so from the absolute low, if we're just doing some measures to that peak, it was 342%. The market still did fall from that peak of 13,900 back down 54% to about 6,400. Now, if we were to get the same sort of repeat, 340% puts us a long, long way up from that 17.5K low. How much higher? Well, 340 odd percent comes out at about $78,000. I don't think that's going to happen from this pump. So I think it's going to be a slightly smaller pump. How big of a pump? Well, I'm looking at overbalances in price using what the market has already shown us in this bear market, how much it likes to pump before it reverses on a macro frame on the weekly chart. So these measures here, you can see on the side here in green, we've got a $10,000 move. We have a $12,900 move. We have another move to the peak here of $11,034. And then the previous one here, we can see was around $5,700. So far on this move, we've done $5,000 and $4,100. So to look for 5,700, we need to get up towards about 26,500, and that brings us out at a really nice clean level here, where the previous resistance was, the dump in May, came down to 26,700. So that level comes out almost nice and clean at around that mid $26,000 level. Basically, if the market can pump up, get us that little bit of a FOMO into that point, that brings us in line with the downtrend. So this is an important level for the market to overcome in this bear market, to break out of the bear market diagonal down. So that's another good tick on the bullish case, which will form in a macro picture. And in terms of the price to the upside, how much the buyers, the bulls, are willing to pump the price before seeing a correction. Now if we can get there, then we start to equal some of the previous runs that it's had. And we need to start equaling those runs to give us that overbalance in price. Basically, that pendulum swing from the bears to the bulls, because so far the bears continue to win. Every time the bulls try and pump the market up, they are not able to push the price as much as it had done in the previous range. What we want to see is the bulls being able to push price in terms of dollars, not just percentages. We're looking at dollars here. We need to see the bulls push it further than the previous push. That means energy is coming back to the bulls. That's essentially how it is looked at and how we can break this down to give us the signal for a flip from a bull to a bear. So overall, I'm long-term bullish because I believe this market will do that. I believe the market will break this downtrend. I believe it will get higher than the downtrend eventually and break past this to give us the breaking of the bear market diagonal downtrend. And then it comes back to retest. Whether that's at a higher price or a lower price is yet to be determined, but the fact that it breaks the diagonal down is a really good signal for the slowing of the bear market, and then we finally come towards the accumulation, and then we start to flip and go into the bull market. So I hope I've been able to break that down pretty simply for any new guys that can start to see these patterns form and then use this in other cryptocurrencies that they might be trading or investing in. It works on all time frames, on all markets, because it's the market psychology that continues to repeat time and time again. If it didn't work, we wouldn't be able to trade these markets, but we are able to trade them because it's the same psychology that happens over and over and over again. So in terms of a percentage, what we're looking for here for Bitcoin is a break above that downtrend, approximately 30%. This is going to sucker a lot of people in as well because it is such a significant move from that 17K low as we start to climb higher. If we get the break and come towards these top prices here, so it's going to be the bottoms of the market dropping, the tops of the rally in May, so basically that bear market rally. After this break, then we're looking at about 55 odd %. So that's where we could potentially see a pullback or a peak if we get the breakout now, and then we finally see that move back to the downside. That's where I'll be getting a little more excited because it just signals another reason that we're coming towards the end of the bear market. A recap of what this information is good for. I believe it's good for traders because we're going to see a little more of an easy move, especially if we get through the price resistance of 25K, this low here at 26.7, and if we can break the diagonal bear market downtrend, then it's going to be a lot more easy for those trades to come through. It's not going to be good for DCA investors because the FOMO does become far more real, especially if it starts to break these levels. But in the past, even in Bitcoin's history, it has pumped, like we've seen in the past here in 2019. That was another 300 and something % move from the bottom to the top, 340%, but the market still retraced. So even if we get this pump up on the diagonal down and the resistance levels, then we'll still get a retracement at some point. When that top comes in, we can measure the down move, and then it gives us a really good idea of where this market could come back and hold as support for the bullish confirmation signal. We need to hold the support before we can move again. Now, I promised a very short video, so I'm going to do another video on Ethereum with this exact signal as well, where we could expect further tops in ETH before we get the rejections using the same sort of pattern. But for now, Bitcoin, it's looking like we're going on that suckers rally, especially if we get through the next resistance level at 25K, probably over the next sort of few days to a week or so, and we start to move to those next higher prices. So pay attention, be aware, have your plans ready in place. Don't get suckered into the FOMO that I'm sure will come. We see it over and over again. This is a good time for traders. XNOP, I believe, is an excellent opportunity coming up for investors and traders, especially as the trends become more clear as well. And the final recap here, short-term bullish, many traps. Medium-term, that's the bearish move where we go up. It's good for trading, but I think we'll see the retracement. Markets always do that. They always retrace to come back and test those prior levels. Long-term, I do believe we'll see another major bull market before 2026. Like, subscribe. Thanks again to everyone joining today. Links in the description for anything that I've used in terms of exchanges. Still $4,500 on Bybit. I'll see you guys at the next video. Have a fantastic day. Until then, peace out.